So let me just go ahead. I wanted to just welcome you to this meeting. You guys know that I've been off for a summer. Hope you guys have been doing well. You know, one of the things that I did at the Wise Woman thing, it's like you guys have seen this ad infinitum, but I kind of added extra pieces because I think that as we're dealing with our assets and things like that, stuff like, you know, balance with your heart, your brain, your spirit all comes into it. So, and also I just kind of wanted to, and Abby, I think we'll talk about this a little bit and anyone else can jump in as well. But for me, in terms of balance, I'm going property, paper, cash in the bank, cash out of the bank, different kinds of currencies, precious metals, cryptocurrencies. Basically, before any of that, I think you should have your basic, you know, prep, food, water, medications, things that you need if it's tough to, you know, if the truck's not coming in, your community, your faith community, your family, your friends, and your spiritual connection to your own source. So in terms of just starting off and setting the tone for what I'm thinking about talking about, and a lot has changed in the world since we visited together. And so I think I'd just as a general concept, I just want to kind of touch in with people's, you know, what's going on, at least for 20, 30 minutes, take a pulse on the market, what are people are seeing, and then for about a half hour of trying to, if people have pressing questions, and I know I was emailed a couple of things. I'm not sure we can get to any or all of them really, but that's kind of the goal. And so Abby, why don't you know, hey, Amerinote Exchange, what's happened from the note broker, the master note broker of the world, you know?
Yeah.
Tell me what's going on. Tell us all.
Yeah, it's the laws of physics have ceased to exist in the secondary, the fact or not talking about the fact that there are turbulent times ahead. And you know, we've been here before where we were talking about folks, you know, in a certain amount of investors exiting the market and taking their capital with them, a whole new set of investors at the same time entering the market, bringing their way more expensive capital with them, where they are wanting to pay less and less for notes and distressed assets or even non-distressed assets. And this was the, you know, the free-for-all, we'll call it, you know, people buying, people selling, people, you know, inquiring for April, May, June, and part of July. And then right around the middle of July, the whole, at least from what we were seeing, it just really started fizzling out, you know, this downward trend of just getting a little bit more quiet, which we attributed to, you know, we saw less in the behavior online with regards to our marketing apparatus, which led me to believe and led our marketing team to believe that people were just tired. They, you know, they wanted to go on vacation. They wanted to take the summer off and forget everything and, you know, get back to normal. A lot of states were opening up. Some states were shutting back down, and it has existed there. Now, during this period of time, it's slowed down tremendously with regards to this rabid, you know, need for generating cash or moving money around or investing money. And now we're seeing the return of extreme, just like David, which I'm sure you would agree that you're probably seeing, you know, obviously in your section of the world, but in what we're seeing across markets, real estate wise, sales price has never been higher. We hear about bidding wars crazier than ever in San Francisco, bidding wars crazier than ever in Austin, and other parts of the United States. And again, that to me is what we're seeing in the note space, where note offers are now, we just closed a note the other day that we wholesaled, is 93 cents on the dollar for a so-so kind of note. So I shouldn't say so. I mean, it was a good note, but it wasn't a note that I would pay 93 cents on the dollar for, you know, in the end. So, you know, to me, that looks like the laws of physics are being defied. Like, it's like one day you're walking down the street and then the next day your feet are just coming off the ground and you're just floating in space. You know, that's what I see.
Yeah, interesting. It just makes me think that there's like the big money has a different set of what they see happening on their level. We were talking a little bit earlier. It's just like, where can they lose less money? Because us as mom and pops, that doesn't make sense. 93 cents on the dollar does not make sense.
Does not make sense.
Really
The yield was somewhere around low 8% range at that price, because it was a decent note. I mean, it was a fairly decent note with a decent interest rate. But you know, I think that the interest rate was 7.5, and the discount was, you know, the yield was 8.1, which again, for a certain investment type, if you kind of portfolio, it depends on the investment appetite. But you know, even in this market, I just felt like that was, you know, I don't see the value in taking that kind of risk, even with, you know, a performing vanilla loan.
Yeah, or I mean, in an interest, you know, if someone thinks, you know, zero interest rates are coming, then that's a fantastic bet, probably. But I don't know. I don't follow the complex financial markets. Do you think there's anyone else that wants to comment on that particular?
This is Sri. Can you hear me?
Sri?
Yeah.
Yeah. Hi. What?
Hi. How are you, Don? Welcome back.
Thank you. Well, welcome back to you.
What I've seen is, as you know, I buy non-performing seconds and first, mostly seconds.
Right.
In March and April, for a little while, not for a long time, I saw prices where they were close to 2010 and 2011.
Right. So low.
I bought a whole bunch of loans.
Right.
And I was using the same pricing scale in May, June, July, August. I lost on all bids. I'm not sure how they're going to make money on them.
Yeah, so what? How do you put that together to make sense? What do you think's happening?
I'm actually kind of confused, because what I'm thinking is, and then I went to some other data sources and actually started looking at what exactly is happening. And the number of loans which are delinquent is nowhere close to what it was in 2010, 2011. So it's not, I mean, at least right now, I'm looking at what number of loans which are in forbearance. I actually covered that in my Saturday monthly meetup. So back in 2010, 2011, there were more than 10 million loans, right? 10 million loans which are in default. Right now, it's right around 2.3. I'm not talking about in foreclosure, but in forbearance. By Freddie, Fannie, Hard, the VA. These are the ones which are, you know, in forbearance right now. So one of the funny thing is, when you look at the credit reports right now, they're reported as current, but when you look at the most recent payments, they will all, you know, dash, 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 means they haven't paid. So the way you read the credit report, and you think it is current, it's not current. They're in forbearance, and it doesn't say they're missed payments. It doesn't say 30 days late, 60, 90. They don't say that. So I don't know if that is, people are misinterpreting that.
No, I think you just tied it in together. If I may add to that, what you're saying is exactly what it ties into what I'm seeing, and I'm sure a bunch of you guys and gals are seeing out there, which is the nothing to see here as the dumpster fire behind you rages. So they're saying that it's current on a centralized credit reporting, in my opinion, a corrupt centralized credit reporting platform. Just like, if you guys recall, Moody's and all of these other, you know, things that were rating these mortgage-backed securities back in 2008, everything's A-okay over here. It's the same playbook with different parts. So yes, you have this this current status on credit reporting, but forbearance is just the Band-Aid on the dam holding the water back, in my opinion, until after November, or maybe even after January, late January, during the inauguration. And then boom, the whole thing is just going to come busting out. There's also something, and you all have to really forgive me here. I did a little bit of research on our last call, which it described, and I'll circle back with this information so I don't look like a complete kook. But there's a reason that Fannie and Freddie backed loans. Now, these seconds, if I may ask a very brief question, these seconds you're making reference to are owner-occupied seconds that are backed by Fannie and Freddie, I'm assuming, correct?
It could be owner occupied, it could be non-owner occupied.
But single family.
Yeah, single family. I'm not
Gotcha.
talking about multi-family.
So there's a something that expires where Fannie and Freddie are then off the hook. The reason that they want these, they don't want them to go delinquent on their watch for a specific purpose, because that would open them and the government up to major legal issues. And forgive me, there's a term or a clause that expires in mid-2022 or late 2021, which a lot of analysts predict that's really when we're going to start seeing a sort of repeat of 2008, where it's not going to be the mortgage purity issue or the default, it's going to be an employment issue. And then once Fannie and Freddie's contract expires, boom, they're out of it, and then they can just walk away and the whole house of cards comes down. So something to that effect. I didn't mean to have a long-winded answer there, but that's kind of making sense what you're saying.
And in my portfolio, right, there are 18 loans that are stuck in the last step of the foreclosure. So there are judicial loans that I'm talking about, moratorium. Foreclosure moratorium has been put in place. Mm-hmm. If anyone is interested, I can send a web link which has all the states that actually is tracking where the moratoriums are on which place. And it's a big mess right now. Like Illinois, Cook County has their own schedule. The whole state has their own schedule. Once the Cook County ends, they fall back to the state's schedule. So it's like they are stuck at different places, and there's no one really knows clear way of, how to get out of this. Like, yeah, a lot of loans are stuck. I have a couple of people who work with me, and they're also stuck. They're asking me, and I don't have a clue because I've never been in this situation where there's a moratorium and you can't move forward, and you have borrowed money at a certain rate, and you're supposed to pay. So that's what is going on my end.
Yeah, this is uncharted. No one has been here.
Yeah, can I just interject something and get some feedback? Earlier in the summer, there were some moratoriums. Is there a lot of background noise? Can you hear that?
No.
No, we're good. All right. I was able to had someone who had filed a Chapter 13, and so that kind of slowed me down from being able to foreclose. But when that stopped, it kind of was at the same time as the end of the first moratorium. But SDS, or Special Default Services, said that you're really lucky because I was able to complete a foreclosure sale. She says, you're really lucky. 98% of the institutional loans and all the other files we have are stuck in the water, but because you're an owner carry, not insured by Freddie and Fannie, et cetera, you were able to complete the foreclosure. Is that still the case? I'm not in foreclosure or anything currently, luckily.
It depends on the county. Okay. So I'm in Virginia. Virginia is fine. Florida is a contingent basis. What they're doing is they're asking the attorneys to move forward, and the borrower has to prove that they have a financial difficulty because of COVID. Like they have loss of income, they have to prove it. I'm not sure what that means, how they're going to prove it. So I have three cases going in Orange County, Florida, beginning of next month. So
are all of your loans institutionally originated?
Yes.
Okay, so in my world, I'm only dealing with the owner carry, which seems to be treated a little bit differently. Yes or no?
Okay.
Anybody's?
I'm guessing. I don't know.
Yes. As you know, or as you may not know, loans are treated differently with regards to how they were structured, who structured them, who's making payments on it, and what the property usage is. Obviously, this goes to the SAFE Act, this goes to Dodd-Frank, but, you know, owner-occupied single-family residences are going to governments. And you know, I don't want to come off as cold-hearted, you know, in the sense for borrowers and tenants, right? They definitely, we all have you know, a dog in this fight, so to speak, but the, I guess the governments run interference a lot more for the borrower and the tenant as opposed to a landlord or a lender, depending on where they're at. And, you know, you're saying this now, they have to prove that COVID you know, affected them. I get that, but we're not, that's not just in finance, guys and gals, that's also in legal. So that's a legal position right now that they're testing for criminal activity as well as debt repayment. On the debt repayment side, folks that were arrested, you know, I'll give you an example. In Alameda County, maybe Alameda County or Contra Costa County, Northern California, if you are caught rioting or looting, the police now have to determine, did you need that product, or was that product for financial gain? And if they determine, if they pass that information on to the prosecutor who's making this decree, if the prosecutor determines that you needed that bar of soap, you don't get locked up or even charged for that matter. So we're seeing this on many different levels across the legal landscape. And that's why we try to pay attention, not just to the financial sectors, real estate, mortgages, currencies, you know, all that, but you try to pay attention to as many sectors as possible to see if there's patterns, right? Because the patterns will, this is how, you know, strategists, investment strategists make their decisions, both in United States and abroad, and elsewhere. So, you know, we just got to be, I can't stress enough to do your own diligence and your own research, and always, 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 always read the source material. Don't take a reporter's word for it, or you know, a politician's word for it, or the borrower's word for it, or your tenant's word for it. Trust but verify.
So Don, one question I wanted to ask is,
Yeah.
based on this, how do you think the owner financing side of the business is going to look like in the near future?
That's a great question. From my point of view, I think overall, in terms of whether I'm offering owner financing on a property I own or whether I'm buying someone else's paper, I mean, Abby, you and I've been talking, like, you know, it's the product hasn't been as good, and we're a lot more conservative on what we would personally take into our portfolios, right?
That is absolutely correct.
And but on the other hand, there could be a real good need, as long as I have someone who has a big down payment. To me, that's a lot. You know, it always comes down to the fundamentals of that protective equity, hard cash equity that they had to save. They didn't win it. They didn't get given it as a gift. They didn't win it in the lottery. You know, they didn't get their tax return and that's their down payment. I mean, something that they show that they have some financial discipline. I would still put those deals together all day long. And I have, you know, three people locally here saying, please get back to work and find me a house, you know, quit lollygagging around figuring out who you're going to be when you grow up, you know. So anyway, to me, that's what sounds fun. And but I guess my bias has always been and still is very much so the owner carry paper, because I don't like the institutional stuff, because look at all these regulations. They've hamstrung all you buyers of institutional paper. And I was able to slide through when 98% of other foreclosures didn't happen this last summer, but mine did, because it was owner carry. And, you know, who knows, be a kook, but I'm pretty comfortable with it at this point. You know, it's just part and parcel of the whole queendom thing. But, you know, to me, there's such epic shifts coming that to think that we can take everything that we've been doing and project what's going to happen, I don't know that that's really sensible. So to me, it's more like gosh, I mean, I do more about just sitting in reflection, meditation, whatever, and just trying to feel this thing out. And it just feels like something completely different's coming.
Yeah.
It doesn't play by the same rules.
Yeah.
And so for me, I mean, if I get back to, and Abby, I'd like to kind of switch over to this, but if I share my screen, just going back to this slide, and I want you to comment on these different things, but one of the things that I do, and I don't know how to move that other thing out of the way, but I'm trying to hedge my bets. So if this happens, how do I have something that goes up and down and go, you know, if this goes down, this goes up. If this happens, what, if this goes down, then what do I have that'll go up? So to me, let's say there was something as radical, absolutely radical as the concept of debt forgiveness, of a jubilee, of some sort of reset that, or trillions of dollars coming back to the public that has been stolen over the decades from the populace. What if? So if I was holding a portfolio of 500,000 worth of institutional paper, on the other side, if that got wiped out, I'd want to have debt, $500,000 of debt that would be forgiven on a piece of property I own, whether that was my own bank loan or something that you know, was subject to, or something like that. So to me, I'm always looking at a little of this, a little of that. And so I guess my point of view, I know I diverge quite greatly with a lot of my peers in the industry that are just looking at this as just like a free for all, and like, you know, God, here it is again, we're all going to get rich. And I go, maybe, I hope so. I mean, I hope you're good. But to me, there's so much else at play. So Abby and David, I'd like to hear from you. You've been quiet, but to me, that's where, can you guys see my screen now?
Yes.
So I have cash, right? I have cash that I'll keep in the bank, but I don't trust the bank. So I have cash that I keep outside of the bank and other currencies. And clear, and then I have property that's highly leveraged. I kind of like the spread. I either want it to be, you know, like my refuge and nothing can happen that will get me out of this property, or highly leveraged, but it still carries itself. I have paper. Actually, I've been winding out of some of my paper positions. It's been nice to get some of those future payments that I put aside for my retirement. I want to wind up some of those situations to reduce my exposure in some markets and to bring that money forward. So luckily I'm having a few of those come in after working really, really hard the last couple of years. Thank you very much. I learned a lot. I have gold, like I said, gold and silver, cryptocurrencies, Bitcoin, Litecoin, ETH, other things. Basic, just survival and barter materials. What if everything goes down? There's no trucks coming in, there's no power. I mean, I'm always, you know, my Mormon roots come back to serve me there. And then, you know, make sure that you know your neighbors and you're working through. If you're like me, anything like me, then you've had a lot going on and coming up from 19 and 20, humdinger. So any issues that have been buried, they're getting shook to the surface, and we all have to deal with a lot of things and get in alignment and balance a lot of, whether you want to call it karma or whatever, do a lot of healing. And you can't see this, but it's a little girl meditating. So to me, at the end of the day, you can diversify, you can prepare. At the end of the day, it's your connection and the way that you vibrate, so to speak, your frequency that really determines, you know, your safety and abundance, to know what to do, where to go, when to be there. You know, you'll rendezvous with more positive things in general. So there's really this balance between enough fear or concern to prepare, but then to change your energy into a really positive outlook, which I can't hold that every day. I'm going to be honest. I can't hold it every day. It's pretty heavy right now. You know, when you feel like just the fires, I mean, the smoke has been so oppressive and it's incredibly heavy. So I can't hold a high vibe all the time, but I think part of the process that we're all going through is being able to sit with the uncomfortableness of uncertainty and to grieve things that are happening. I mean, that balance of light and dark and negative and positive. So anyway, there's my little soapbox. But so Kurt, Dave, and Abby, I know you and I have talked about things I want you to bring up, but Dave, I want to hear from you a little bit before we get too far into this.
We're at a very strange market in Lake Tahoe because it's relatively speaking a tiny place that all of a sudden is probably more in demand than it's ever been, with all the techies saying, hey, I can work from home, so why don't I go to Tahoe?
Right.
And we're seeing people come up buying second homes for $600,000, $700,000, $800,000 cash. And, things are not staying on the market, et cetera, et cetera. And a lot of them are thinking they're going to be living here permanently and may sell their Bay Area property. It just depends on what Google and Apple and all those companies decide to do. But the interesting thing is we're really a blue collar town. We're a service town. And these people are coming up with Bay Area salaries.
Right.
And it's kind of an interesting dynamic. We've got one area called Tahoe Keys, which is pretty much identical to Foster City, and same developer and so on, that are lake access houses that turned into about 90% vacation homes. And of course, everybody was up in arms and they passed them vacation homes. And now all of a sudden, those are turning back into primary homes with these people coming in and buying them. So it's a very interesting cycle in a little town of 30,000. And yet we've been having some lakefront. Zuckerberg spent $55 million for his 2 houses. Helen Mirren, the actress, is right down the street from Zuckerberg now. Yet our town is probably 50% subsidized lunches in the schools.
Wow.
So we are the extremes, as extreme as can be.
You know what? I mean, when that the issue came, short-term rentals in Tahoe, I thought it was going to spell disaster, but then basically the pandemic saved you guys with all these people. With all these people.
Well, the ban, the moratorium coming down the road and no renewals of permits or anything, it didn't affect prices.
Yeah.
Surprisingly, there are people who want to own second homes and they don't have to rent them out. A lot of them do so they can get the tax breaks.
Right.
May I interject and say, you're right. And that's, again, defying the laws of physics there, but I feel that can kind of be explained by this very simple outline or illustration. The Tahoe area is primarily, just like you said, tech-based clientele. San Francisco, maybe even part of Southern California, and Hollywood, more tech. As long as their stock prices keep soaring, and I don't know if anyone knows this, but ExxonMobil or Standard Oil, ExxonMobil was replaced. It's the oldest company on the Dow Jones, and General Electric or another, ExxonMobil and Raytheon. I mean, removed, I say, from the Dow Jones and replaced with Salesforce and another, I think Honeywell is what replaced Raytheon. But that's a huge signal to the market that the old world is dead. The new world is this. This is the new world, data-driven, item besides oil. It used to be oil for energy. Now it's data. Everyone wants data. So my point is that as those stock prices continue to soar, so will your property values.
Right.
And the disparity in the potential economic disparity. Because I think it's good that there's a mix there for the locals and the non-local or the new locals. But once that balance goes like this, it's not good. It's not good for anyone.
It's interesting comparing it to the meltdown in 2007 and 8, because our prices dropped 50%.
Yeah.
And they've just now recovered,
Right.
and the dot-com pushed it forward.
Right.
But the dynamic is different this time because probably 30 to 40% of the escrows are cash.
Yeah. Now let me ask, I have a question. Is it foreign? Is there a lot of
There probably is, but I'm not aware of it.
Okay, gotcha. And usually we wouldn't be because they're done through trusts and,
Right.
you know.
Yeah, and
shelter.
a couple offices specialize at those levels.
That's right, for privacy.
But the last meltdown was simply because loans were made based on how many mirrors you could fog. Yeah, and now, I mean, these are cash buyers, 50% down, et cetera. So I think, this time around, we're going to survive it a lot better than the last time around.
So I have an important question. Can you fog more or less mirrors if you're wearing a mask?
It depends on whether there's a vent port on it. So I have a bankruptcy.
I'm sorry. I was just going to add 2 cents in here. Hi, everybody. I was listening to a podcast on Saturday, and the speaker was talking about the Bay Area, and he said that one of the things that companies there are doing is that they're offering their employees bonuses to relocate to other states if they'll take a 10% pay cut. They're giving them like $20,000 to move to more affordable states.
Wow.
So I thought that was interesting.
Wow.
Yeah, I think there's a lot of dynamics that are going to take place in these corporations. I had a 10% note due in 10 years. The people went into bankruptcy, and the judge in bankruptcy.
7 or 13?
Pardon?
7 or 13?
13.
Okay.
And the judge converted the note to a 30-year amortized 4.5% note. And he had the authority to do it. And but he did the very same thing to Wells Fargo Bank. He rewrote their note.
Maybe Sri, you can communicate to or speak to this. I thought that they had to do something that.
What? Come again. I was trying to running around putting my kids to bed. Go ahead.
Yeah, I mean, the bankruptcy BK13 turned his 10-year maturity date into a 30. Do they do that routinely? I thought they had to have things that resolved within 5 years or something.
Generally, what they do is, so there are 2 things, right? So let's suppose there are $100,000 in the UPB, and there are arrears that were made up to 20,000. So when you get in a plan that 20,000 arrears are supposed to be paid in the 5 years, the rest of the term, if the loan was not completely discharged, in the sense the borrower was discharged and it was a Chapter 13, and they said if they follow the 5-year plan, they don't have to pay anything, assuming it's a second, right? Then you're totally stripped. But I never heard about a loan, because a bankruptcy, what it deals with is the arrears that were due that need to be paid within the 5-year period while they're paying the monthly payments.
Yeah.
But the bankruptcy doesn't, at least I have not heard a situation where they have increased the loan term to 30 years. This is a first for me.
I never heard of it.
And this was in 2007 or 8 that it happened.
Do you know which jurisdiction it was in?
It was in Reno.
Wow. I mean, the only weird thing I know is from 2008 to 2013, I think in the southern district of that's Florida, Alabama, they were stripping even in the Chapter 7. After the Bank of America fought and they repealed that. So you cannot strip a second in Chapter 7 anymore. You can do that in Chapter 13. There was a weird period because I saw a lot of notes in that period that are being sold right now. And if you hadn't looked at the BK petition carefully, you could lose all of that because those were actually stripped.
Yeah, this was a first loan on land.
Yeah, your first loan, it was performing. Yeah, I mean, that's just kind of bad luck.
Yeah. Well, at least he's been paying now. That's been 10, 12 years. So.
Yeah, you could do worse. Like, I've taken some beatings on a couple of the last couple, about at least one of them. So if you at least get the money back sometime, it's kind of good.
Walking out of the casino even.
Yeah. Abby, let's switch real quick to some of the other, I mentioned a lot of different asset classes. Can you
Yeah.
speak to what you're seeing, what you think makes sense to diversify into and to be looking carefully at going forward?
Okay, yeah, I would love to. I want to preface this by saying, because you know me and my long-winded answers, I'd like to preface this by saying there's a lot out there that, I don't want to get too technical in what we're looking at because I don't want to, I don't want to confuse the situation and drown the question out with technicalities, right, or technical jargon. But just the short.
Yeah, like the 20, 30,000.
Right. So the short answer and the high level, low Earth orbit view would be I am not, there's money. There's money to be made in the stock market for sure. There's especially like day trading. If you know how to do it, I've been kind of researching that a lot lately, or this year. Just kind of toying with it, but there's a lot of money to be made in the stock market, especially on day trading. There could be value buying on stocks where you're purchasing, buying low and holding, that kind of thing. You would need to do your research and understand what kind of asset class you want to go into. Obviously, I think the big winner is going to be tech and innovation in, how we transact and how we communicate. In COVID, vaccines and biomed is another one that could be a good research. And let's not forget 5G, right? So you want to look for semiconductor stocks, especially Asian-based. I would stay away from China. No offense to anyone in China. I'm just saying for all of the issues that it's going through, maybe stick with something in like Malaysia or Japan or somewhere in those areas, or whatever you're comfortable with. But semiconductor products that are affiliated with 5G rollout, especially when the iPhone 12 comes out, it's going to be the fully capable, fully functioning first iPhone that's 5G. And that's basically going to, provide a lot of upside for folks who get in early. I would recommend not necessarily buying into like Apple, although Apple may be a good buy and hold, but I'm talking about doing your research to see if there's any conferences that were done in the past 5 years where they were talking about 5G. See, you can go to those conference pages just like you do on a note conference or a real estate conference, and you can see who the attendees were, and then you can cross-reference those attendees to see if any of them are semiconductor or transistor or make parts for iPhones. And then if they're publicly traded and they have a 30 cents stock price, I would put $1,000 on that, because if they are rolling out with 5G and Apple, that $30 stock price may go to $60 by the end of the year. So that's what I mean, where you can make a tremendous amount of money on researching in stocks. But my preference and my comfort level, I do invest in stocks. I do invest in real estate. We're always looking for good assets in real estate and, of course, notes. I'm really, really keen, I think I mentioned it before, on the cryptocurrency space. Cryptocurrency is going to, whether you like it or I shouldn't say cryptocurrency, but digital currency, not the same, not to be confused with cryptocurrency. Digital currency is going to transform the way we transact by 2025. And the reason I say that is because it's on the Federal Reserve's website. Anyone can go there right now and see that their plan to roll this out is something called FedCoin or something along those lines, where they're going to try to compete with, again, China's rolling out of the digital yuan. And this is the future of money. And, everyone should really get comfortable with the terms cryptocurrency, software wallet, hardware wallet, blockchain, immutable ledger. These are terms that we're going to hear more and more in the next 5 years, where you don't have to go to a centralized bank anymore, like Wells Fargo, and pay them to secure your assets. You can now put them into blockchains, which are carried out by a protocol, in some cases decentralized, or the safer bets, and park your money there. And then in addition to that, you can also go to, there's all kinds of new fintech services that are opening up. Fintech, I don't know if anyone is familiar with Kraken. I don't know if anyone invests in Bitcoin, but there's a exchange called Kraken. It's a US-based cryptocurrency exchange. Well, just about, I don't know, 4 days ago, the state of Wyoming issued Kraken a banking license. It is now a legal bank. So this is the future. No one's talking about it. Everyone's quietly, JP Morgan and Goldman Sachs and all these other companies are going, nothing to see here, nothing to see here. Cryptocurrency, criminals use it, criminals use it. So let me ask you, in the 80s or 90s, when you watched like a gangster movie, did they open the briefcase and not have $100 bills in there? Do criminals not use $100 bills? The stuff they're making makes no sense. It's the same thing that occurred in 2008 when we were all told real estate's no good, nothing to see here, nothing to see here. And now we know they were scooping up that real estate like crazy. I believe the same thing is happening right now in the cryptocurrency space. And I also believe firmly that a Bitcoin will be $100,000 in the next 2 years. I hope, I mean, there's, the data is there for this. So I'm very bullish on that. But those are the asset classes that I have my eye on at the moment.
Thank you for sharing that. In terms of the Kraken, do you mean in terms of their own stock, like with the BNB coin and investment, but you're investing in the company itself or in all the various, I mean, I know they have a lot of altcoins that don't show up on the larger exchanges.
So I'm not talking, right. So, you know, I don't want to, again, if you are thinking about doing this and you know nothing about cryptocurrency, stay away from altcoins. Stay away. They are risky. Alternative coins are not Bitcoin. There's thousands of them. But yes, you don't necessarily invest in a company, although there is a website to do that, where it's now a secondary market. I actually just became an investor in one of the companies, believe it or not, but it's a secondary market that trades, just like our secondary market trades notes. This secondary market trades non-public stock and investor generating, investor interest into cryptocurrency for fundraising. And you can buy for as little as $1,000 a share into, Kraken or Coinbase or projects like Ripple. You know what I mean? Rich Dad, Poor Dad, Robert Kiyosaki said it the best. People get taxed differently when they earn money, W-2, 1099. It's just the way it is. You get taxed differently. That's why the wealthy, or the ones who aspire to be, secure in their wealth, don't necessarily focus too much on that W-2 job. They buy assets and they own, because that's taxed a hell of a lot differently. So when you start thinking like that and spreading your money around with that in mind, whether you're investing in a crypto-based company, which I think, again, is the future, especially ones that are applying for the banking licenses, because, our comptroller right now, Mr. Brooks, was the chief legal officer of Coinbase. He's now in charge of the currency supply in the United States. So again, it's happening. But when you start applying and spreading the idea that you're, how your taxation occurs, it makes a hell of a lot of sense to use that ability to put money into corporations and assets that, you'll get taxed on the value, capital gains as opposed to income.
Yeah, thank you for sharing all of that. It's very interesting. Like if I'm going to sum up some of the things that you're really talking to, it's like, well, the digital currency. So to me, this is like, comes back to, somebody said something, I'm trying to remember this week, but they said, oh, in the wrong hands, oh, that just sounds really dangerous. Well, everything, depending on who's controlling it, a gun doesn't kill people, people kill people. Because if someone wants to kill someone, they can pick up a hammer. And so, or if, there's a breach in security, they're tracking us. Well, depending on who's controlling that and who's watchdogging that and how much transparency there is, evil. And so to me, the things that I hear that make sense also at the same time send up red flags to me, because, okay, yeah, vaccines are big money. yeah, well, I don't really like big pharma. And I think the vaccines are a lot of danger, depending on who's developing it, what's in it, and all of that. So, and then also 5G, depending on what frequency it's built around, it's either life-giving or life-destroying.
Life-threatening, right?
Yeah, so these are things that make or break our whole civilization. And there was another thing, digital currency. So if we totally go to a cashless society, I don't feel good about that. I don't like the fact that someone with a press of a button can do this or that, but cryptocurrency gives you freedom. So there's all sorts of like liberating things coming up at the same time as really things I don't think are life supporting. I think they reduce freedom instead of increase freedom. So it's kind of like, there's a lot of discernment to be done. Whether do I want to invest in something? I don't care if I can make, you know, $1,000 that will strip myself, my children, my grandchildren of the world that I would like to see. So I think it's good to say there's kind of a good and a bad side of every technology that we have. And I would just suggest that it's important to, just why I don't like leaving a lot of money in the bank or supporting Wall Street as much, because I know that they're robbing us blind. That's why I've always been that, you know, one mom and pop to another kind of thing.
Right.
So,
and I will also add that, you know, I want everyone to remember the moment that you deposit, or I deposit $100 into a bank, that $100 is legally no longer yours.
Yep.
It's legally no longer yours. And that's why bail-ins are extremely, they can be extremely deadly to our economy, which is why you should diversify. There are other institutions out there like BlockFi, who is wholeheartedly backed by Fidelity, or you can go directly to Fidelity. I'm talking about the brokerage house, who is heavily, heavily involved in the on-ramping of cryptocurrency for the public. And, you know, the moment that you can go like 7-Eleven, right? In the next 12 months, you're going to be able to go into a 7-Eleven, go to an ATM and buy crypto, buy Bitcoin right there, and then have it printed out on some sort of, I guess, Visa card or something, where it's just a regular credit card. That is called on-ramping. So where it becomes, you don't have to think about it. It's just like another transaction. That's when the popularity will take off. But I know this is more along the lines of real estate and real estate investing and note investing, so I don't want to stray too far, but I will say that there's going to be, and right now there's something called yield farming in crypto, which is microloans made, you know, you stake your crypto, right? So you take it, you park it on an exchange, and then that exchange has a protocol just like email, which there's no human, it's just a protocol that carries out a function which does this lending, even micro lending, where you put the money out and you get 20% back in 3 seconds, and you put the money out and you get 10% back in 2 days. And it depends on what you're staking and what the percentage is. That's also going to start coming into play with real estate and other products once the banks really start offering crypto products through their means. And they already have custodianship, where they can hold your crypto as a custodian. So this all just happened in the past 3 months. This is being rolled out very, very quickly, and it's going to start affecting everyone in a positive or a negative way, depending on how educated you become and how quickly that happens.
Yeah, well, thank you for that.
Sure.
You know, one of my suppositions is that just understanding owner financing, understanding the secondary market for notes, to me, the bigger picture has always been, it teaches you to think differently. It teaches you to expand your ways to solve problems. So I really don't see it being a conflict for us to talk about other ways to think creatively, to stretch our brains and come at things a different way. Because, you know, just if you stay with real estate and notes, understanding owner financing and the secondary market for notes gives you, whether you're buying property or paper or selling, it gives you so many more options. And so to me, it's the exercise of what we've been doing for the last few years, Abby, is very useful.
Yes.
As a life tool. And I think I've always said that the most valuable life lessons I've learned since I quit my nursing job and started this whole path, you know, down to whatever became, you know, the No Queen thing. What I learned along the way was way more important than just the product itself, and what it's allowed me to do and how it allows me to think.
That's right.
But I still think I always come back to, people, if we don't keep our freedoms, to me, there's a pretty fairly epic battle going on. I don't know that anyone could somewhat argue with that. It's very hot. I mean, times are so hot. To me, it's the epic battle between light and dark, between freedom and slavery. And so in the context of all of this, we can be really intelligent and clever, but if we don't keep basic freedoms, if it's liberty versus Marxism, for instance, is what I see happening here, it doesn't matter. It really doesn't matter. So to me, I would say, and in terms of just navigating, and I'm sorry to the people, we didn't get really a chance to, and maybe we'll just do some spontaneous other meetings to handle some questions and scenarios that I know people have been wanting to hear about.
Yeah.
But let's just wrap this up, Abby, with like how we navigate when there's so much going on that every day, like you were saying, like I do the same thing and it's driving me nuts. Like I go, what happened?
Yeah.
What happened? I'm looking for the headlines.
Right.
I'm on my device instead of doing my yoga and meditation
So
the same way that I should have been doing, because at the end of the day, it's the centeredness and our own connection to source, frankly, that is the most important thing and the best value we do for ourselves and frankly, the entire planet. So,
yes.
Comments?
Yes. Yes. So, I was talking to Dawn earlier today and I said to Dawn, I'm addicted to I have this new addiction and it's my telephone. Since COVID, at first it was headline shock. Who has COVID? Who's doing, what's happening? And I just went unchecked, because I was just, not even centering myself at all. And Dawn, obviously, you know me very well, that I try to practice, being centered as much as possible because balance is key in every factor of life. And I become a phone addict, I wake up, I look at Coinbase, I look at my crypto, I look at the stocks, even before I check my emails, and then I go right to the news and, what's this one saying? What's that one saying? And who's rioting and who's, whatever. And over the past 2 weeks, I just had it, and I take my phone on Friday afternoon, I take this little SOB and I put it right in the drawer in the kitchen, and I don't check it until periodically. If anyone needs to really get a hold of me, they'll text my wife if it's an emergency, and they'll be like, "Yo, why isn't Abby answering?" going on 3 weeks now. I have my phone on me Monday through Friday morning, and then done. And strict, just waking up Saturday, meditating, not like a half hour, but like just sitting there, not trying to get too technical, just closing my eyes and allowing thoughts to just pass through me, not analyze them, not judge them, not judge myself, not judge others. It's extremely hard. Just like it's extremely hard to do your foot for, and I use the gym analogy because I went through this personally. It's just like it's extremely hard to do the first pull-up when you're 55 pounds overweight. It's extremely hard. But as you do it, and as you break those, every day you do a little inch here, an inch there, before you know it, you're 3 meters down the field. And, meditation and centering is a muscle, more or less. And the muscle is the muscle of spirit. And you really need to practice that. And I knew that. I've practiced it in the past pretty successfully. I had ups, I had downs, and now I'm re-entering that phase of my life where it's time to center ourselves. Because let me tell you, and I'm pretty sure that every sentient being on this call can agree that the answers are not out there. And I know this sounds like esoteric and airy-fairy, but all the answers we need are in the center. We just got to bring it into the center. And like Dawn always says, feel it out. It's, again, not going to be easy, but that's that's my struggle right now. And I'm pretty sure a lot can relate to that, I would imagine.
Yeah, well, thank you for that. And yeah, I know from, you know, some of our earlier visits together, when you're getting to know each other, that you're very powerful. And we know how it's very powerful to use your brain. It's very powerful to use your heart. It's very powerful to expand your sense of your consciousness of who we are, because at the end of the day, but we can all get lost. I mean, it's very tough to stay focused, and takes a lot of focus, but dedication, you know, discipline, which like we have some days and some days we don't, but really our sense of who we are is going to define where we end up going. So who do we identify as? Do we identify as a small, insignificant, sad, depressed, burnt out, you know, person, or do we see ourselves, you know, as this magnificent piece of source, a child of God, if you will? And so depending on who we think we are is how we're going to attract and build, you know, forward in our own lives and in the world. So I think I will just leave you with that, since we're at the end of the hour and I don't want to go over. The East Coast people, it's already 10 o'clock. So thank you so much. It's been lovely to spend time. All of you have been so wonderful. Thank you, Abby. Thank you, David.
Thank you.
And Sri, and all of you that came to participate. And we will stay in touch. You'll get an email when the next thing happens. So, you know, go out there, use your powers for good, and go out there and create financial solutions, just one mom and pop to another. I'll catch
Thank you.
next time. All right.
Thank you.
Good night, everybody.
Great. Thank you both and
Thank you.
all of you for your contributions. Wonderful.
Thanks, Mary
Yeah.
Kay. Bye.
Thank you.